The United States will continue binging and borrowing at least till early February. Why do you think the rest of the world keeps indulging this clearly unhealthy economic behavior?
Well, we're not going to stop in February either. Look, America is going to borrow as much money as the world is dumb enough to lend us. That's the bottom line, because we've already borrowed more money than we can possibly repay. We can barely pay the interest. The only reason we can pay the interest is because the rates are so low. But when rates go up, we won't even be able to afford the interest, let alone the principal. So it's a Ponzi scheme. We've told the world it's a Ponzi scheme, yet for some reason, everybody continues to participate in the scam. The question is, how much longer will the rest of the world throw good money after bad because they don't want to admit the mistakes that they've made, that they've loaned us all this money that they're not going to get back? And
I think one of the reasons why the world doesn't really want to recognize the mistakes that it's made is because American politicians, like most addicts, keep promising that they're going to change. You know, just give us the money today for this last dose, and tomorrow we will check into rehab. And in a similar fashion, American politicians keep saying that, you know, we are going to rein in the expenditures, we are going to increase the revenues, but the debt to GDP ratio keeps increasing. So who do you think should take the initiative here? Is it the addict who has to act first, or those who deliberately or not fit into this addiction?
No, I believe that it's going to have to come from abroad. It's going to have to be the pressure brought about by our creditors. U.S. politicians will never do the right thing until they're forced to. Why should they ever cut government spending if the world is willing to continue to buy our bonds? As long as the world is lending, we're going to keep borrowing. So it's not the debt ceiling. We'll always raise that. It's the lending ceiling. The eventual collapse is going to be imposed upon us from abroad when the world doesn't want to buy our bonds anymore. Then the dollar is going to crash. We're going to have a dollar crisis. We're going to have a sovereign debt crisis, and the party will come to an end. But not on our terms. It'll be the world that finally imposes the discipline that our own leaders lack the integrity or the courage to adopt themselves.
But Peter's going to respond.
There's a lot of people who like to hear themselves talk out there. The bottom line is, Peter, first of all, where are the Chinese going to go? You're talking about rates are backing up here. Where aren't they going up? You show me a country around the world where rates aren't going up. You want to be in Europe? And you tell me what happens when the 10-year goes over 4%. The Chinese will be first in line to buy the 10-year. You tell me
they won't.
Where are rates going to go, Peter? Are rates really going to go up to 6% next year? In this world, in this environment? Where are you going to buy it's a better deal than Treasuries at 4%?
Treasuries are a lousy deal. I think rates
What are you buying
then?
You've always got a lot to say against the dollar and the U.S. government. What are you buying that's not gold? And give me something specific.
Well, time for today's bar chart. The U.S. Treasury rally. Resistance is futile. Never ever did I think we'd get a Star Trek reference into my bar chart slot. Not only that, we have a Borg reference. They're all looking at me. Borg, what is he talking about? Now, all you Trekkies will know that the Borg were an alien race who forced other species into their collective. Before doing so, they would say the phrase, resistance is futile. Now, anyway, fighting the strongest, this is relevant, fighting the strongest Treasury market rally in a quarter century is like trying to resist the Borg. The words of Nomura Holdings, they say, it's futile. Take a look at this chart. This is the Bloomberg U.S. Treasury Bond Index, which includes treasuries with a maturity greater than 12 months. It's now risen for 5 straight weeks. This is a one-year chart, 5 straight weeks. As you can see at the top right-hand corner, it's resting at an all-time high. Year to date, it's gained 3%. Only Canadian, Belgian, Slovakian, UK and Danish sovereign bonds have started 2015 stronger. In January, by the way, the benchmark 10-year note dropped 53 basis points to 1.64%. That's the biggest decline in any January since 1988. The yield on the 30-year Treasury is at a record low. It too fell 53 basis points in January. Plunging yields in Europe are making those on America's bonds much more attractive, and the drop in yields could continue to 1.5% on the US 10-year note from 1.64%. So says Nomura, only if stocks falling, by the way, analysts still forecast that the 10-year yield at the end of 2015 will be 2.75%. That's some discrepancy between 1.6% today and 2.75%. Low oil prices are playing a part. Low inflation are playing a part. Inflation expectations are dropping. The difference on yields between the 10-year note and similar maturity Treasury inflation-protected securities, or TIPS, has fallen to 1.66 percentage points from 2.23 percentage points at the end of 2013. A final word from Nimura. Buying Treasuries might feel like being co-joined with the Borg. The market has now entered into a momentum phase. Respect it. The US Treasury rally. Resistance is futile.